Thank you very much indeed for these kind words of introducing me, and also thank you very much for the invitation. As you all know, I was supposed to be here with you already a few months ago, but at the time we had this volcanic cloud that made it impossible to come to Dublin. At the time, we still have some clouds, even though they're not volcanic by nature, but we still have clouds, of course, hanging over our economies and hanging over our financial markets. I therefore normally speak about the year 4 of the crisis rather than the year 1 after the crisis, even though in my country, in Germany, right now things are going reasonably well. But we shouldn't forget that overall we still have major challenges ahead of us. The Western economies in total still depend to a very large extent upon the well-being of the emerging markets. And if it weren't for China, Brazil and the like, we would find it even more difficult. And also we shouldn't forget, even though things are going well in Germany, we're having a growth of 3.4% probably this year, we lost 5% last year. So we are still, even though we have a very good year, we'll still be considerably below the pre-crisis level. So things are difficult. Now, they were particularly difficult 2 years ago when the Lehman Brothers company collapsed, and when it became quite clear that we do not have one of those many crises, financial crises, that we've had ever since the World War II already. Somebody counted them and said we had in total something like 160 financial crises, but those were regional or local crises. We had the peso crisis, the Argentinian crisis, the Russian crisis, the Asian crisis. This time it was clear pretty soon this is a global financial crisis. And that's why the G20 got together in Washington in October or November 2008, and then in London, and then in Pittsburgh, and in Toronto, and they'll meet pretty soon in Korea. And they promised that they would find a global answer to the global crisis. And we all were quite relieved when we heard this, because we said, okay, now things will be put right, and the chance that such a crisis can repeat itself will be extremely slim, maybe close to zero. Now, 2 years later, and this is a highly subjective personal view, have the feeling that G20 has not delivered on the promises. Many a member of the G20 groups has started doing things and implementing corrective measures. I'm not saying they haven't done anything. This is certainly not true. But when you really look at it, you have to realize that it is a national interest that has, by and large, determined the type of measure that has been chosen. The Americans have chosen their approach. They've, as you know, the Chris Barney Frank reform bill has passed in July, got the signature by the president, 2,300 pages. And many of the topics that are in there, many of the issues that have been addressed are issues, of course, that we also, here in Europe, have addressed and still are addressing. But it is not the single global answer that we all had hoped for. It is, by and large, the US answer for their particular country, and it is, in contrast, the European answer that we are working on in the European Parliament, primarily because most of the issues that we are dealing with are issues that do require legislation at European level that will then be transposed into the national legislation. So the objectives are pretty much the same, whether you talk about the reform bill in Washington, whether you talk about the many, many individual dossiers that we are dealing with in Brussels. But the approach in detail, unfortunately, isn't. We have made a comparison between the reform bill and the various dossiers that we have already been working on and have concluded, and that we are still working on. And we have come to the conclusion that only out of 20 areas, only in 6 or 7 can we really say that pretty much the approach is, if not identical, at least very, very similar. And we shouldn't forget that when it comes to critical areas like capitalization of financial institutions, for instance, the Americans have not implemented Basel II yet. So we are now talking about Basel III, Basel IV, new rules, and the Americans say we are going to implement them very much the same way and the same day as you do, but of course this remains to be seen. Now, having said so, it is this what we have to bear in mind when you listen now to what our committee has been doing so far and is trying to do also in the months ahead. This committee, the so-called temporary committee on the financial, economic and social crisis, has been set up in October 2008, in other words, 2009, sorry, a year after the Lehman collapse. And our charter was very simple. The charter was to look into the causes of the crisis, to assess the impact that this crisis has had, and to draw some concrete conclusions and come forward with policy recommendations that we consider not only useful but necessary if we want to make sure that a repetition of the crisis is unlikely, let's put it this way. Nothing is impossible but unlikely, and that we really would bring Europe back on the rails. We have approached this work with a total number of 45 members of the committee. I should, however, say that of those 45, I would say only 15 to maybe 20 have really been actively involved. This is not a lack of understanding or lack of interest. We shouldn't forget that normally an MEP is already active in 2 committees. So being yet in a 3rd committee that quite often also has its meetings and reunions at a time that is already taken up for or planned for the other committees is difficult. But those 15 that sort of did spend their time with the committee work and did participate actively, of course, were also then able to make a good contribution. We approached the whole mandate by organizing a number of hearings with experts from outside. Those were experts from academia, from business, from the financial sector, from politics, from think tanks, from you know, a broad range of areas. We had hearings, workshops and hearings. We defined 9 thematic papers that we had that were being worked on by individual members of our group. Thematic paper could deal, for instance, with the question of SMEs and the crisis in SMEs, could deal with the question of public debt. 9 different thematic papers. In fact, they are attached to all the documents are, by the way, available on the internet. If you have access to the European Parliament, you can then look into all these documents if they are or could potentially be of interest to you. We did organize delegation trips to Basel Committee to talk there with the Managing Director and General Secretary. We talked to the WTO, we talked to the ILO, the International Labour Office in Geneva. We went on a delegation trip to Washington and to Wall Street and to Beijing and Shanghai. And we also paid a visit to Latvia, a country that has particularly been hard hit due to the crisis and is one of the smaller new member states that we have chosen kind of being representative for a few others. Now, the impact that we concluded, of course, or the impact that we assessed, of course, is severe. The many million jobs that the European Union was able to create before the crisis were basically being wiped out overnight. We lost minimum of 8 million jobs due to the crisis. We have a loss of, we will need a few years to get back to the former growth pattern, should we ever get back to that, you know, or should we maybe have to accept the fact that we will continue to grow, but it's a kind of a parallel shift in time. So this is, and what is particularly unacceptable is that not only do we have a high unemployment rate due to the loss of jobs of 10% on average now, varying from country to country, and I know that you here in Ireland, you also suffer from what, 13.5 or 14%. What is unacceptable, in my opinion, is the fact that we have an unemployment rate of those below 25 years of 20% on average, going up to 40% in some countries like Spain. Now, if we want to make sure that this crisis does not threaten the social fabric of our society, we have to address this problem. And we have to come forward with really tangible results and conclusions, because we shouldn't kid ourselves. This is not just a financial crisis, it is also particularly a confidence crisis. And many a citizen now has lost the confidence that our system, our societal system of the so-called social market economy is really doing the trick. And I think it's particularly the responsibility of us, of the politicians, to make sure that we restore that confidence, or at least neutralize it, because otherwise I think we are really in a very difficult situation. Now, in our committee, as you can imagine, this goes on a democratic basis, as in all parliaments. We do have representatives from all political groups. We have Social Democrats, we have Christian Democrats, we have so-called European conservatives and reformers, where the Tories are. We have the Liberals, we have the Greens, we have well, they call themselves the left, but it's really close to being communist, I would say. And we have also the European Freedom and Democratic group, which is the sort of right wing of Italian politics. So we have the whole spectrum. And that, of course, as you can imagine, is on the one hand extremely interesting, because each group brings, of course, different points of view and to the party, and also different recommendations. But it's also very, very challenging if you want the group to eventually agree on a report. And we felt it is important that the Parliament, and particularly this committee, in the end, would have the strength and the power to agree with a huge majority on a single report and say, this is our signal to the outside world. If we had come forward with 3 or 4 different reports, it would have meant that, well, even if the biggest crisis that you can imagine since World War II, the Parliament is not able to formulate a single answer. This would have been a discreditatory to us. Now, let me just, as an example, mention this. When we were in Washington, we also had a meeting with their crisis committee. The crisis committee of the Congress has a very limited mandate, namely only to look into the causes, not to assess the impact, not to formulate any conclusions or recommendations, only the analysis of the causes. They will present their report in December, and they are a committee of 12, 6 Democrats and I think 6 Republicans. But already now it looks as if they will come forward with 3 different reports. The 6 Democrats will issue 1 report. There is 1 Republican that will issue his own report, and 5 other Republicans that will have their report. So this is not a good signal to the outside world. If a group of 12 cannot, even bipartisan, cannot agree on a single assessment of the situation, I think this is what we try to avoid, and I think we have done so. We have voted the report with a overwhelming majority of more than 90% in the committee, and also 2 days ago, Wednesday, in Strasbourg in our chamber. Now, what is the outcome? What are we really trying to tell those that read it? And you have already mentioned this. Let me tell you that this report, in order to find the support of basically all members, needed to be reworked a few times. The original draft was a very pronounced socialist draft, presented by Pervenche Berès, who to her socialism is really a matter of heart, you know, which is fair enough. I accept that, but what she concluded was just not acceptable, because it was too extreme, and it was almost to the point you would say, here's ideology more important than anything else. This has been changed. and because we had 1,625 amendments, and you can imagine 1,625 amendments are killing you. You cannot really work with it. That's like a thick stacks of paper. You cannot work with that. So we started anew, and it was possible to sort of reach gradually a consensus and even respected the timing, which more than once looked rather impossible. Now, the conclusions, we have a few conclusions, which I try to maybe summarize. But maybe before I do this, let me just spend a couple of minutes on the causes, because here too, we did have, in the beginning, a rather difference. The causes are, when you really look at it, more than just one or two factors. You know, gradually when you look at the papers or read the tabloids, you say, well, it's the greed of the financial sector and this and that. When you really look at it, it's basically every part of the economy and every part of also society is involved. It starts really with a very sort of illusionary, I should say, a social policy statement of the United States. Namely, each and every American should have his or her own house or apartment, whether he or her can afford it or not, basically. This is the income hypothesis, which meant, of course, that the banks started to offer loans without really looking into the creditworthiness of the credit seeker in a professional manner. That is the second mistake, then, the banking. Then, of course, in order to be able to satisfy the demand, the increasing demand, they started to develop those structured products by lumping together the credits that they'd given, and then they sold them through securitization around the globe to the rest of the world, where they did find investors that were greedy enough and wanted to get a good return. And they could do so because the credit rating agencies, accepting a conflict of interest by also consulting the issuers, helped them package these structure those products, and gave them initially very good ratings, AAA, AA+, etc. Now, in addition, of course, we had a lack of supervision. When I think of one of the banks that comes to my mind in Germany, Sachsen LB is a state-held, state-held or savings bank-held bank in the state of Saxony. The mission of which is basically to finance the small and medium-sized sector business plus finance infrastructure projects. That's the mission. That they cannot earn 25% return on equity doing that business is clear. But they wanted to do better than, say, just returning 4 or 5%. So they set up a special purpose vehicle outside Germany, here in your country, and invested double-digit billions there in those special purpose, in those structured products, and refinanced them not with the same time frame. In other words, if the structured product had a time till maturity of 5 years, they financed them tapping the money market. Now, you can imagine when the money market dried up, what the situation was. And here, the supervision failed. The German supervisor was not interested in the small line on the bottom of the page that said there is a special purpose vehicle in Ireland. But that was all. It was not consolidated. And the German supervisor did not ring his colleague in Dublin and say, well, you better look at this, you know, or something. So it went unanalyzed and unfollowed. And this, of course, was a problem. And that's one of the reasons. And, of course, we shouldn't forget the laxist monetary policy that we had, that Alan Greenspan had started, and maybe when he started it was well justified, but he let it go far too long, and of course the risk management in the financial institution wasn't good either. It wasn't good enough, I should say. So, this is the starting position. And now I should say, ever since all of this became clear, and some of those, to a different degree, most of those causes were sort of if not known because of a detailed analysis, it also was felt that something was wrong there. The Parliament started early on, after the G20 had announced their program. The Parliament started working against this program. We said one by one, we want to do by spring next year, we want to have finished all the jobs that our G20, European G20 members pledged to do. So one of the questions was also supervision, for instance, and we have, just a couple of months ago, we have finally passed, with the consent of the Council and with the consent of the Commission, the new regulatory scheme for supervision in Europe. The supervisory architecture will be changed. As of 1st of January next year, we will have 3 European supervisory agencies, one for securities and markets in Paris, one for banks in London, one for insurance and occupational pensions in Frankfurt, plus a European Systemic Risk Board attached to the European Central Bank, with Jean-Claude Trichet, the president of the ECB, being also the president of this Systemic Risk Board. This is just one of many, many dossiers that we have been working on, and a few others are still coming, but it gives you an idea as to that things are being addressed and are moving. And in fact, I should say you, ever since the crisis has erupted, the Commission is putting increasingly fast dossiers on the tables of the parliamentarians that we have to deal with. Before, when we had the idea that, we had done already too much, because we had done a lot of regulation in the past, but we felt now it's better to stop. Charlie McCreevy at the time, and I was supporting him, because I felt his analysis then was correct, said less is more. And all of a sudden, and that was still at the end of his mandate, of Charlie McCreevy's mandate, he realized, no, we have to really shift in another gear and do really much more. The deregulation, the way it had been practiced in the Western world, as such, has failed. So what are now our committee overall conclusions? First conclusion is that, whether we like it or not, that we have, in some areas, we have to have more Europe. Now, this is at first, you may say, oh my God, the citizens are already so Eurosceptic. If we now turn around and say we have to have more Europe, they will not like this idea. But of course, we are not saying we have to have more Europe across the board. We say there are some areas where we have to have more Europe. When it was quite clear when the single currency was introduced and when member states agreed on having a single monetary policy, that you really normally can't do this unless you also have a handle on the fiscal policy. This is quite normal. Every member state that has its own currency, monetary, has also the fiscal authority. Now, this was not the case here. And we now realize that we cannot go on as is. We do have to deepen integration. We have to have a much closer coordination of the economic, fiscal, and in some cases even social policies. The Commission, Olli Rehn, has put forward some ideas in that respect that I think are good enough to be taken seriously and to be discussed in detail. And now, of course, this is something that will change also the role of the national parliaments. And as you can imagine, they are not jumping up and down and applauding, because they say national budgets are the really competence of national parliaments. It's clear. But if we do go this route, and if we do coordinate the budgets, for instance, before they are being put to the vote and discussion in national parliaments, there may be changes that will follow this discussion or that central sort of scrutiny or surveillance in Brussels. And that we have to accept, and we have to convince national parliaments that this is really in the interest of each and everybody. We have to second, and Mario Monti has produced a report on this subject that he handed over to the Commission and to President Barroso in particular. We have to complete the single market. We say, by and large, well, the single market has been completed when Jacques Delors finished, you know, in the early 90s. Well, when you really look at it, there's still protectionist barriers, etc., in one way or another. And when it comes to the service sector, we still are not really having a fully completed single market. We need it badly. We need to create a European labor market, particularly also when with regard to our demographic situation. That now we still don't consider to be a problem, even though in my country, in Germany, already we still have 3 million unemployed. But those are unemployed because they have a lack of skills, to a large extent. I wouldn't say 100%, but to a very large extent. And 300,000 are missing that we would badly need. Engineers, chemists, physicists, etc. We don't have them for the time being. And so a European labor market could alleviate this to some extent. Probably 10 years from now, even that won't do, the European labor market. We would have to agree on a European immigration policy, which is now the competence of the member states. But of course, if somebody comes from a country outside of Europe to Ireland, and after 3 or 4 years, say, whenever he can or she can, becomes a citizen, then of course the whole European market is open. And if we had not agreed on a single set of criteria that we all endorse, you know, people might end up in some countries where normally they could never have immigrated directly. So it's better that we agree on a system. And I personally think that the approach that Canada and Australia have taken to clearly define what are our needs and what are therefore the criteria that we should apply before we're letting somebody in on that is the right one. Of course, so far in Europe we have more looked at the humanitarian side than at anything else. We have to make sure, and we were talking about this briefly over tea before coming here, we have to look at the Stability and Growth Pact again and accept the fact that the Stability and Growth Pact has not worked. I think this is a fair statement, and it has not worked for a number of reasons. It has not worked because the criteria that were part of the Stability and Growth Pact really don't give you the whole picture and the whole answer. Your own country and Spain, for instance, did not really violate the criteria before the crisis, and all of a sudden, nonetheless, we're in difficulties. The question of how the competitiveness develops over time compared to other countries is not being looked at. The question of macroeconomic imbalances is not being looked at. The question of the trade of, what is it? No, the exchange rates, the trade balances or the service balances, it has not been being looked at properly. It was very simple, 3%, 60%, and interest rate and inflationary level, but even then, those criteria were not rigorously applied. I mean, Italy had more than 100% when it became a member. Belgium had more than 100, but Italy was close to 100% of cumulative debt. They could enter nonetheless. Greece, it was clear at the beginning that there were major question marks, but you know they also let them in basically. And what is worse, that was bad enough. But what was worse is that two important countries, namely my own Germany and France, violated against the rules of the pact and refused to be called to discipline. In 2005, the German Minister of Finance, Hans Eichel, refused to accept a warning letter from Brussels, and Chancellor Schröder engineered this with Chirac, and they agreed that there is no sin has been committed, so to speak. The sinners have to decide about whether or not they have sinned, and they decided this time we haven't sinned because we still feel innocent. And this, of course, as you can imagine, undermined the credibility of the pact considerably, and that, of course, we had to realize in the years that would follow. Now in just a few months ago, after the Greek crisis really came to a culmination, after the umbrella had to be developed, after the European finance facility had to be set up, totaling 750 billion, as you know, each and every member state agreed that we have to do something to reintroduce discipline, okay? And we were all hopeful that really this time we would have a new start, a successful new start. And the net result is that the Commission, Olli Rehn, put forward ideas that would have resulted in an almost automatic introduction or application of sanctions, or introduction of sanction mechanism. And it would have been, if the Commission had announced or stated, here is an emergency situation, and we have to consider severe measures, then 2/3 of the member states would have had to object to this statement to put it out of existence. Now, Merkel and Sarkozy last Monday again agreed that we stick to the old rules, that 2/3 have to decide that they have sinned, which is, of course, we are back to square one, and this has not worked in the first place. And why have they agreed on this? Because, so says our Chancellor, Sarkozy, against what he originally had in mind, now has shown his willingness to support Germany in introducing a so-called insolvency or restructuring regime for states, for governments, not just for financial institutions, but for governments, which would require a change of the treaty, and so France would back Germany in requesting such a change. I can only say, when I look at it pragmatically, a change of treaty is not easily to be had. That requires a lot of negotiation. It requires unanimity. It requires referenda in a few member states. So it's not in the cards for the years ahead. So Sarkozy can promise this easily because he knows he will not have to deliver. Maybe his successor, but even that is unlikely. And therefore, I think it was a bad agreement that was, and it was also, from a style point of view, it was, to my opinion, unacceptable. It's not acceptable that in a critical situation like the one that we're in right now, two countries, as big, important, and pro-European as they may be, simply decide amongst themselves and say the rest, the 14 others, 2 plus, we have 16 now, and Estonia will be the 17th in January. So the 14 others better follow us. End of the story, we don't discuss anymore, you follow us. This is not acceptable. I think in the Europe that we want to build for the future, and if we want to not find ourselves in such a difficult situation again, then this is not the way we should approach things. And therefore, I'm personally very unhappy with this approach, and I think it will prove to be not very productive. What we do need is, though, there I do agree with the Chancellor Merkel in substance. I think we have to have two things. One, when the financial facility ends in 2.5 years, well, May 2012, I think it will end, or 13 rather, 3 years. When it ends, we have to have a replacement, but it should not be simply a sort of how shall I say, a second phase of the same. It should really be a separate thing, whether you call it European Monetary Fund, European Stabilization Fund, Euro Stabilization, it doesn't make any difference. I think that should be a permanent rescue mechanism, but it should be combined with really possibilities to also restructure public debt in countries that are in difficulty. In other words, when the country really finds itself no longer in a position to pay its debt, it should not be the taxpayers, not of their own country nor of the other countries, that bail them simply out. Then the creditors should, whether it's public, institutional, or private investors, should bear part of that burden. And I think this is no big deal or no surprise. We've had this in Argentina and in Mexico and in other countries. I myself remember I once had an Argentinian bond. I was happy to sell it in the secondary market for 42. I paid more for that. But that's the way it goes. I mean, why should the taxpayers of countries that are not involved at all bail out in such a case investors, whether the private, institutional, or even other countries? So this, I think, would be useful. Now, whether we need a treaty change for this, or whether we can find a different way to introduce this, I don't know. If maybe one way would be if the next country becomes a member, like Croatia, in 2 years' time probably, maybe then we can make it part of the accession treaty and thereby sneak it in. We have to have, I think, since we all know that governments, by and large, unfortunately, do not always do what they consider to be best objectively. They do many things that they consider to be most useful considering the next elections. I think we have to be very realistic here. And therefore, I think we should launch at the European scales a few projects that are too big for any member state anyhow, but that are badly needed if we want to defend or even improve the competitiveness of the European economy in the future. And those are what I call truly European infrastructure projects. Like in the energy field, first of all, we have to have a single European energy policy. It's not acceptable that we have 27 energy policies that are partially in contradiction to each other, hindering each other. We have to have a European transmission grid, energy grid, to make sure that when some country is producing more power than it needs, it can easily send that power to somewhere else. That exists, of course, in Central Europe. But when you think of the periphery, when you think of the Baltic states depend to a large extent on Russian electricity. This is not acceptable anymore. There is blackmail, danger of blackmail, etc. We should get over this. We do have to have in Europe, ever since we have had the cloud, the volcanic cloud, it's become quite clear on the continent, we have to have a high-speed transportation system for passengers and cargo. When you look at the maps now, you realize many countries do have some lines of high-speed trains. But they normally end 10, 20 kilometers before the border, and they are not linked with the other country, But between Strasbourg and Stuttgart or Karlsruhe, it's a Bummelzug, It's a low speed. It's not even an average speed train. There's no linkage. So this has to be changed. We have to have telecom projects like broadband. Broadband has to be throughout the Union, not just in the metropolitan area, throughout the Union. We have to have e-health. There are many projects, and those projects, in my opinion, could be financed with the EIB, European Investment Bank, and also with using the for instance, Eurobonds. For those projects, I would be willing to accept Eurobonds, I'm not personally, this is strictly personal, I'm not personally in favor of using Eurobonds to finance the debt of the various members of the Eurozone, because that would, in the end, of course, reduce the burden for the Portuguese and the Greeks, etc., but it would automatically raise the interest for the others, and therefore it would be difficult to sell to the citizens. The European infrastructure proposal, I think, can be solved. The SME sector still is the backbone of the European economy, whether we like it or not. The jobs that are being created are there. It's not the giants that create the jobs. It's not the Siemens and the Mercedes and the Bosch, etc. It's really the small SMEs that create the jobs, and therefore we have to make sure that they have the chances that they deserve. We have to make sure that they have access to technological developments, and they have access to financial resources. They find it increasingly difficult to get the financing that they need, and therefore we have to think also of creating innovative financial sources for them, which are not all the way available. Now, I come closely to the end here when it comes to the conclusions. We have to have also answers to where I don't see the Commission nor others giving us an answer yet. The question of too big to fail. It's not really too big to fail for a financial institution. It's more too interconnected to fail. Because when you think of Lehman was not a giant, Lehman Brothers, and when I think of the German banks that were bailed out, IKB, small regional bank really, but very interconnected. Due to the globalization, the financial institutions are very interconnected. We have to find answers. We have to, whether it's the last will or whether it's the possibility to split up the financial institution into a bad bank and a good bank, etc. We have to find ways and means that will enable us, should an institution run into difficulties again, not to ask the taxpayer, but simply say, okay, this one we cut in 2 and 3 and whatever, and that's it. And lastly, we think we should have a Mr. or a Mrs. Euro. Now you say, well, Jean-Claude Juncker is Mr. Euro. Okay, occasionally somebody says Jean-Claude Trichet is Mr. Euro, you know, so they have to come to terms amongst themselves. But what we think is the following. You know that since the Lisbon Treaty, we have Lady Ashton as the High Representative of the Security and External Affairs sectors for the European Union. And she is, even though she's the Vice President of the Commission, she is chairing the meetings of the foreign ministers of the Council, so to speak, Ministerial Council. And we think a Mr. or Mrs. Euro should also be a Vice President of the Commission and chair the ECOFIN councils. And then she or he should represent, if not the EU, at least the Eurozone in international fora. We have to be represented by one person in international fora. And this is true not just for the Eurozone, it's also true for the EU when it comes to matters like climate, etc. We have it in one case when it comes to the world trade negotiations, to the trade negotiations. There we are being represented by one, but not by the others. So here we have. Now let me come to an end, and I'll just say a couple of words at the very end. This is, as I indicated already, not just a financial, economic, social, etc. It's also a crisis of confidence. And therefore, we have to find ways and means to improve the communication with our citizens. It's easily said, we have a commissioner that does nothing but communication, but somehow it does not work. I have to accept it. It does not work. The citizens do not feel well and regularly enough informed, and they do not understand what's going on in Brussels many, many times, unfortunately. And the last point is, we all know that if we want to succeed in future, we need growth. Because if we don't have growth and get our economies to develop well again, you know, we cannot save enough to overcome our problems. It has to be a combination of spending the money intelligently and of ensuring growth. To ensure growth, you have to have entrepreneurship and entrepreneurial spirit. And we have to therefore ask ourselves, are all the things that we do, all the directives and the resolutions that we decide, even though one by one they are well thought through, they are well justified, do they in total maybe create a burden that is too much red tape and bureaucracy and does sort of limit the entrepreneurial possibilities and spirits? And if that were the case, we have to think again, you know, because you can do many, many things that each and one are well justified, but in total, they may have a negative consequence or negative impact. And that's, of course, what we would like to avoid. Next phase, we are going on till early summer. We want to get the national parliaments on board. We want to work closely with them, because unless we have the support of the national parliaments, we will not be able to really change a few things the way we think they ought to be changed. We are sending our report to the national parliaments. We have defined a number of key issues that we want them to react to. We will then organize a joint conference in early March. Exchange notes, exchange ideas, and hopefully then we can say, this is our idea, here's the feedback by the national parliaments, and this is the synthesis that we feel ought to be done.